All right. Hey, welcome to Investing with Keto. And, today we've got a special guest with us. His name is Braden Vukelich. And, basically, I want you to hear his story and how he got into investing in real estate. So, Braden, how are you today?
Excellent. I love it. Nice catching up with you, Keto.
Yeah, nice catching up with you. Thank you for taking the time to be with us. So, for those of people who don't know you, kind of, share us a little bit about yourself and how you got into real estate.
Sure. So long story short, I didn't wake up one day and say, I want to be a real estate agent. I've been a serial entrepreneur with several businesses. My brother and I had a 5-unit building in Ballard that we took over in 2007. And we knew we wanted to own more property at that time and thought, geez, we love real estate. Why don't we maybe think about buying a property management company and get our license and buy more property and manage our own property? And so we acquired a small management firm in 2009, and my brother hated it right off the get-go. And so our stepsister and I took that over in 2010 and moved it to West Seattle. And at the time, we were managing about 120 doors. We call it doors. And in 4 years, I got that to 300. And over those 4 years, I was doing deals on the side. Someone would come to me and say, Brandon, you do real estate, right? And I'm like, well, I mean, I'm licensed. I'm really focused on property management. But then I would do a deal here and there. Like, wow, I like the transaction. I like that. It's fun. I love looking at properties. I love going to neighborhoods I normally wouldn't go to in my day-to-day life, So, but after 4 years of property management, getting beat up for that, I decided to sell my shares to my stepsister and go full-time into just the sales side and working with investors and adding more properties for myself and my brother. We're still business partners. And that's kind of how I got into real estate.
hmm So what was it that, that attracted you? I mean, I know that you were like a serial entrepreneur, but what was it about real estate that attracted you to it?
So my grandparents on both sides are, I'm a third generation Seattle native, and they all own real estate. And so I would witness that, and other people in our family owned real estate, rentals, multifamily specifically. My grandfather on my mom's side did own some properties, commercial properties in Bellevue and Redmond at one point, but the focus was always apartments. And the more and more that my brother and I kind of researched on how we wanted to grow our wealth and grow our business, it all focused kind of on multifamily. People always need a place over their head, and they always need food and water, right? And I didn't want to own a restaurant or anything really, so we focused on the multifamily side.
hmm Nice. So kind of share with us, some of your stories of like, some bad deals and,
Oh
some
yeah.
good deals. So kind of share with us, I call it the war stories, right? Because,
Oh man.
sometimes when we look at people with real estate and it seems like it looks
Yes.
nice and rosy from the outside, right? But so kind of share behind the scene,
Sure.
like a war story that comes to mind and what you learned from that
So
experience.
uh, you know uh, if I knew then what I know now, obviously, like a lot of people say, I would have made those huge mistakes, but greed was a part of it. I've learned you cannot be greedy with real estate. It's not a quick get rich quick scheme, right? And you can't cut corners. There's lots of things out there where, yeah, you get fortunate and do a quick deal and you make good money, but for the most part, it's not a get rich quick. And my best friend and I, we bought a condo as a rental in Vegas. That was our first rental together, my best friend and I. It worked great. We were making a couple $100 a month, with very little down. We should have just cookie cuttered that. But the agent in Vegas talked us into, hey, you should look at these new developments, new build spec homes. They're getting it in, and by the time they close, they're up 40, 50,000. And so we jumped in and bought two. We were part of the hype, and that was in 2004, 2006. We got get going with that, and sure enough, keto, by the time those houses were done, the market was tanking. And I went out there to Vegas to check on, the status of them, what we were going to do with them. And I looked down the street and every house was for sale. I swear, 9 out of 10 of those, everybody was doing the same thing. Lost our butts on those deals. And so I will never do speculation as an investment strategy ever again. That's,
hmm
that's my, that's my worst story.
hmm Right. Yeah. That can get scary,
Yeah.
just speculating. And now it's so what are some of the things that you're doing now just to kind of, when you're how are you analyzing property? How do you know
Right.
which property to pick up?
So thankfully, we all don't want the same thing, right? It's competitive enough out there. And my brother and I, we try to stick to our model, and it's not always right or wrong because there's people out there making a killing in Airbnb properties, flipping properties, wholesaling. Our long-term strategy, I have kids I want to pay for college. I have retirement I want to save for plans. We are building multifamily as our long-term strategy, and we're trying to acquire 4 doors a year with our goal to be at a couple hundred, 300 doors in the next 15 years. We're at 22 right now. We have 18 in Boise, and we have 4 over 2 properties in Tacoma. So that's kind of our plan. And, we like we're kind of conservative on our numbers. We don't want to go below basically a 6% cap rate or so. We want to average maybe a net of $200 per door that we own. So those are some of the metrics that we look for.
Hmm. Right. And so in terms of, is there a particular area you guys focus on, or just basically investing, just kind of looking at the numbers and see what makes sense?
Well, when we sold our Ballard property in 2017, we moved our capital to Boise and got into a much larger property there. And we wanted more at that time, but man, the word was out, and it was a hot market. And now prices are 20% higher than they were when we bought just in 2017. And it's hard to find. The inventory is still lean there too. Otherwise, we're still focused on Tacoma. I'm very bullish on the Kitsap area, Kitsap County, Bremerton, Port Orchard. I see a lot of people commuting, taking the ferry from over there to Seattle. We'll look as far south as maybe Lakewood, but not much farther south than that. And again, just a personal preference, with all the craziness that's going on within the city of Seattle, they're already a very anti-landlord city anyway. I will not own anything in the city of Seattle anymore. And all my investors that even ask about it, I say, if you insist, I'll help you. But I really think that you have better opportunities with less liability as a landlord if you look elsewhere.
Mm-hmm. Gotcha. And so, starting out, someone who's, new in terms of wanting to get invest in real estate, like what advice or tips could you give someone just starting out?
So it's really hard unless you have any funds to buy, a multifamily property on your own. Unless you're going to, looking back, I tried to talk to my wife. I wanted to buy a triplex when we first were getting married in California, and we could have bought that with FHA, 3.5% down, and just kind of, they call it now house hacking. That's the popular word being thrown around. But I have a couple young brokers in my office right now doing that. Young guys, they're buying fourplexes with 3.5% down, or even on a VA loan. If you're a veteran, you can get in real cheap, live in one unit, fix it up while you live there. As the next tenant turns over, move in there, fix that one up, and then you kind of build up some equity. Again, real estate is not a get rich quick scheme. You can get in low if you're willing to do a house hack or something like that. Otherwise, most of my investors are coming with 25 to 30% down to buy a property.
Mm-hmm. It sounds like that's a good way to go, because I know, like when I bought my first property, right? It was a piece of junk, and fix it up and rent it out. But looking back, I think it would make sense, someone who's starting out, who don't have any properties right now, making their first property like a triplex or fourplex, where, like you said, something you could get in with with FHA loan as well as 3.5% down, and
Yep.
just doing that's your first property, and then you can always move up from there.
Right. And it's residential financing, right? So you can buy anything up to 4 units on residential financing, which is 30-year FHA. And as we speak right now, which is the end of July 2020, rates are crazy, crazy low, crazy. You're just not going to find cheaper money to finance a deal, especially if you're going to house hack.
Right. Now, what's your feeling now? Because, obviously this is like unprecedented time, right? In
Yep.
terms of fires and stuff. What's your take in terms of, investing in real estate?
It's very competitive. We don't have the luxury of being a tire kicker. You can't look at it, have a deal running on your desk and let it sit for a few days or a couple of weeks as you analyze the numbers. I mean, you have to be ready and willing to pull the trigger. There is so much money and cash floating around there, other competitive investors.
Mm-hmm.
you got to lock that property up, do your due diligence. If it doesn't work, back out, whatever. But you just don't have time to be lollygagging and taking your time. That's unfortunate, but that's the state of the market, and people are paying crazy prices for properties. I analyze deals every day, and I see them. I track everything active, pending, and sold between Everett and Olympia and out towards Bremerton. And the prices some of these properties go for, I'm like, I don't know who's doing this. Why would you pay that based on the performance? But a lot of people buy on potential, and I don't like potential. I like fact. What is it doing today? I do budget in what I think I can do, but I'm not buying strictly on potential either.
Nice. Well, Brandon, thank you for taking your time out today. It's valuable information. A couple key nuggets for me was just taking action and don't get greedy, because I know it's easy
Right.
to get greedy, and really looking in terms of real estate. It's a long game. It's not get rich quick like you see on these infomercials and stuff like that, right? Because you could get burned, because I've been burned before, right? And so just looking at for the long term.
Well, the best advice I can give somebody too, as a new investor, real quick, is just make sure you're well capitalized. A lot of people use every last penny to get into a property. Things will come up: new roof, water heaters. Market goes down, rents go down. You need to be well capitalized to ride out those storms, and that's another thing I learned. So anyway, that's
all right.
a bit.
Thank you. And so, how can people get a hold of you and
Sure.
whatnot?
So I am a licensed managing broker in the state of Washington, and I hang my license. I'm the managing broker at Blackwell Real Estate in Tacoma. Brandon at blackwellre.com. I also invest with my brother through Clean Wave Property Group, which is brothers buying houses, and we do wholesaling, investing for ourselves, buy and hold, find flip opportunities for clients, and that's Brandon at cleanwavepg.com. 206-250-6961. Anytime, anything real estate related.
All right. Well, thank you very much, and I'll make sure I'll put that in the show notes as well. So again, I appreciate your time.
Yeah.
And thank you very much, Brandon.
Nice catching up, Keto. Thank you.
All right. Have a great day.
Bye.